Good morning, everybody, and welcome to this panel session, which we've called The Power of Pensions, How Pension Funds Can Invest with Impact. I'm Jamie Broderick, and I'm a director at the Impact Investing Institute. My professional background is as the business head of UBS Wealth Management UK and JP Morgan Asset Management Europe. It's interesting, the video you just saw is a great intro to our session. You heard it touch on a number of topics that I think will come up in this discussion. But I'm thinking in particular of the myth that impact investing implies a sacrifice of returns, which is something Mark Carney and others have touched on. We also heard it talk about the need to invest in a transitional world, one that challenges some of our historic beliefs and practices, including our understanding of investment risk and where we find opportunities for return. And given that there was a shout out to Nest Pension Fund in the video, let's move on to introduce our panelists who include Nest. So I'm really pleased to welcome three people that have very special insights into pension funds, the investments that they make, and the significance of those investments to society and to the beneficiaries of the pension funds, which is to say, the members themselves. So they are Diandra Soobiah, Head of Responsible Investment at Nest, the largest DC pension scheme in the UK at 8 million members. Debbie Fielder, Deputy Head of Clwyd Pension Fund, the £2 billion local government pension scheme Vest in Flintshire. And Emilie, Bellet, founder of digital platform Vestpod, which seeks to financially empower women. She's also author of the Amazon bestseller, You're Not Broke, You're Pre-Rich. We're going to start with a discussion with our panelists, then we'll move to your questions, always one of the best parts of these discussions. So as in the previous sessions, please type directly in the Q&A feature at the bottom of your screen. Don't wait until the end, just as you think of questions. And even if you don't have a question of your own, take a look at the Q&A box because you can upvote other people's questions. So let's start by having each of the panelists give a brief description of themselves and their organizations. And Diandra, can we start with you?
Yeah, sure. Hi, Jamie. Can you hear me okay?
Yes, we can.
Sorry, I was just trying to adjust the camera there. Yeah, thank you for inviting me to speak today. So I'm Diandra Soobiah, Head of Responsible Investment at Nest. And for those people who don't know, Nest is a UK defined contribution pension scheme set up by government for auto-enrolment that came into effect in 2012 now. And since that time, Nest has grown to become the biggest scheme in the country by membership. We've got almost 10 million members saving with us, and we've got 14 billion pounds of assets under management currently, but we are growing exponentially. We're set to be at about 100 billion by the end of the next decade. And perhaps more importantly, 1/3 of the working population is expected to have an account with Nest by the end of the next decade. So it's a huge responsibility for us there.
Thanks, Diandra. And when I introduce you, obviously, I can't keep up with your exponential growth. So you really are quite a substantial presence in the market. Debbie, can we go to you?
Hi, yeah, thank you, everybody. I'd just like to say as well, I've been here for the whole morning and I found it really, really interesting. As you said, I'm the Deputy Head of the Clwyd Pension Fund based in North Wales, defined benefit local government pension scheme. I've got no RI team, just me and a couple of small members. So it's a tiny part of my role. I don't pretend to be an expert in this area, but we are a very diversified pension fund. We've got only 20% in equities. We've got just under 50,000 members, and we've got 27% in private markets, which is where we focus our area of investment. And given the low allocation to equities, we concentrated on that area because that's where we thought we could make a difference. We've actually been investing in, apologies, my dogs have been going nuts this morning. We've been investing in impacts, and we've been investing in impact since 2007, not intentionally, but when I've looked back at our portfolio, that's how long we've actually been investing in it. We've got 18 investments within the space, 12 managers. We've committed over 116 million across both private equity, property, infrastructure, and private debt. The funds that we've invested in those areas range from 25 million sterling to €1 billion. So we can be a small player in the market, or we can be part of a small fund. But when we did an analysis of our fund, we found that we had a lot more exposure within other managers to impact projects. Thank you.
Great. Thank you, Debbie. Emilie?
Good morning. Thank you for having me. So I'm Emilie Bellet. I'm the founder of a digital platform called Vestpod. And my personal mission is to empower women financially. I think you're all conscious of the gender gap, the gender pension gap. So it's really helping women understand the choices they have. My background is actually in private equity, in investment, and I also set up a few businesses. But I realized I wasn't actually managing my own finances because it's quite hard to find the resources to do so. So I'll tell you more about my story, how we help women. We organize workshops, classes, conferences for women to learn about pensions, ISA, how to grow wealth, how to earn more. This is really important. And I'm also the author of You're Not Broke, You're Pre-Rich. So it was quite a journey from working for Lehman Brothers in 2008 to now trying to educate people financially.
Great, thank you, Emilie. So to move on to my first question, I was really pleased to hear Guy Opperman, the pensions minister, in his presentation just preceded this, put so much focus on pension numbers. That's what this is really all about. He said pension funds are not just investors, they are guardians of other people's money. And he made the point that pension members deserve clearer communication, better transparency. So it's great to have the pensions minister recognizing that central, that fundamental role that members play. But actually, most members don't know much about their pensions, either because they're DB, they're defined benefit schemes, or they're defined contribution auto-enrollment schemes, which can create a kind of a passive relationship with the pension fund. So what can be done about that? Or what is being done about that? And Emilie, I want to come back to you, start with you, because you're an expert on financial awareness among non-professionals. That's kind of what you do. So what's your view on this issue of member relationship with the pension fund?
Yeah, so I think, you're right. I think we really need to educate people about pensions. And I'll just start briefly about my own story. So I have a master's in finance. I studied economics. I worked for Lehman Brothers, and then I worked in private equity for 7 years. But I actually didn't have a pension for most of these years. And I was a good saver. I think women are actually good savers, but we don't necessarily invest money. So at which point you actually think about pension differently and think about the power of pension. I think one of the reasons why is because there's clearly an advice in financial gap, and most people can't access financial advisors, so no one can help them actually do the work around pensions. I think it would be great to make pensions easier to understand. People don't think pensions are interesting, and think they can be complicated products. You talked about DC versus DB, inflation, returns. This can be quite overwhelming for someone who's not very familiar with the terms. So what can we focus on? I think looking at a pension pots can be quite misleading, and people don't necessarily understand, what's going to come out of this pension pot. So I think, can we maybe focus on the income we're going to get from our pension pots, and that maybe will help people to save more for their future. If we look at the state pension again, with the new state pension, the income you can get on a full state pension is slightly above 9K. Can you live on that? That's not going to be enough. So that leaves a big responsibility on us, on individuals, to actually save for our own future. But when I talk to people on a daily basis, there's so many reasons to actually opt out from a pension. And if you think it's overwhelming, you don't understand it, you need more cash today, you're not going to be ready to actually put more money into your pension, and opting out from like your workplace pension. So I think easier pension calculators, telling people, what are your options and how much money you're going to get from your pension pots. If we just take a pot of 100K, that's going to give you, between 4 or 5K of income per annum, depending on the age at which you retire. What are your options? But I think it's a number that's much easier to understand than just the size of a pension pot. And the second thing for me is around investing. Most savers don't actually know that their pension is invested in the stock market. That's really surprising, but 70% of UK workers don't know how their pension works. And there's lots of misconception around investing. People think it's extremely risky. I've seen this because, you know, in all our workshops and classes, people ask me, you know, about why should we invest? I mean, isn't cash safer? And it's not for the long term. We know that because of inflation, because of compound interest. So it's actually crucial for people to get started investing money, but they really think it's only for people who have a lot of money, and that's definitely not for them. And I think this has consequences on, I mean, again, for me, the gender pension gap is really important. Women tend to invest much less than men. So how do we get people started, you know, investing money and think differently about pensions? These are really, for me, two things that would be really interesting.
Thanks, Emilie. And Diandra, so Nest, how do you do this? How do you, I know you do tons of surveys, so how do you engage your many, many members? What kinds of things are you doing, and what is your motivation for engaging with members? What are you trying to achieve there?
Mm-hmm. Okay, yeah. So, I mean, firstly, I'd like to say that, you know, from our perspective, auto-enrollment has been a fantastic success, and I think has helped overcome behavioural barriers to long-term savings. You know, we've got large swathes of the working population now saving into a retirement pot for the first time. So I think that is a huge success. But obviously with auto-engagement, with auto-enrollment does come disengagement. And that is, I think, the barrier that now that auto-enrollment providers need to start overcoming. But I mean, you know, if you look at the nature of our pension, our membership, you know, these are generally quite inert people who've never really saved before. And from our perspective, you know, from a starting point, low engagement isn't necessarily a bad thing. I think we were coming at it, well, if we get quite an active membership who start checking their pensions on a regular basis, looking at, you know, potential volatility, downturns in the performance of their pension pots, they may well start opting out, and that is a risk for us. So persistency and you know, having our members not opt out is the first step to having a successful retirement pot. But I think over time, you know, now is the time really to start building up engagement and start informing people that they do have a pension. I mean, as Emilie pointed out, there, you know, we have a proportion of our savers unaware that they even have a pension pot with Nest. So that is the starting point, to start reaching out to members, telling them, you know, you have a pension pot, you know, you have a pension fund that's saving into investments and companies all around the world. So just sort of building up that foundational understanding and knowledge for us is the starting point. You know, we don't think it's particularly useful, and a lot of the research that we've done shows that, you know, whilst responsible investment is a great hook to start getting people engaged about their long-term savings, bombarding them with messages around responsible investment isn't going to be useful if they lack that basic awareness and understanding of the fact that they have a pension and what is it there to do for them in the long term. So drip feeding the messages about pensions is a great starting point for us. Building up awareness amongst quite an inert, disengaged pension membership is really important. And once we've started to create that awareness, then we're starting to, you know, to sort of drip feed messaging around sustainability. And we found that to be quite impactful. We started this process for around 2 years now, where we've started drip feeding the messages, building in messaging around responsible investment, around some of the work that we've been doing on tobacco, climate change, the living wage. So really bringing into play issues that really resonate with our members. You know, we've got a very young age profile of members in our scheme. Nearly half are below the age of 35. We've got more women in our scheme than we have men. And we know these groups are quite interested in the issues of sustainability. You know, they're starting to change their behaviours around issues of sustainability. So we're really, you know, starting to tap into that and start, you know, targeting those groups with those messages that we think they will mostly resonate with. We've also got to be conscious that we do have a very, well, nearly all of our members are on low to middle incomes. So, you know, for them to be parting with, you know, some of their money each month is quite a big deal. You know, these are people who are struggling to make ends meet. So for them, the priority would be to understand, well, am I getting something from this? You know, am I making a financial return? So we do need to be careful about the extent to which we start, you know, bombarding people with sustainability messages when really these people just want to know that they're making a financial return at the end of the day. And that's why we are very careful to, when we do, you know, communicate with our membership, And when we do talk to them about sustainability, we're always careful to ensure that we highlight, well, sustainability and investing responsibly actually helps us secure the best risk-adjusted returns for you at retirement. So, you know, talking about the financial gains that members will make at the end of it is really crucial. Raising awareness that they have a pension is really important. And then drip feeding in messages of sustainability to really consolidate that communication package is really crucial.
Very, very wise counsel, Diandra, from a very experienced person and organization. But I think, you know, for a lot of sustainability people, a lot of impact people, they're ready to barge in, rush in with the sustainability and impact story. And what you and Emilie are saying is there's a foundation that has to be laid first. And I think that's probably a bit of a revelation for a lot of people in this sector. Debbie, I wanted to ask you, at Clwyd, how are you communicating with members? I mean, do you show them what you're doing? Do they see the holdings? So what's you're a DB plan?
We've got a very open and transparent committee system. And on our committee, we've got employer representatives for the 3 main employers plus another body. We've got 49 employers, which isn't too many to have to try and communicate with. And we've also got on our committee a scheme member representative who has been hugely helpful to us in the 6 years that he's been on the committee, helping us along our RI transition. We've got an investment strategy statement and a separate responsible investment policy, and we communicated and consulted our employers on that, as they are the employers for their members. So some of the employers, there might only be 10 people within the fund, but everybody gets a chance to make a comment and consult on our RI policy. This is the first year as well that we included a specific climate policy within it as well. So we were very interested in what the different employers had to say. All of our members get sent what we call a pen pal every year to update them on what is going on within the fund. All our documents are on the website, including our annual report, which gives a list of all the funds we are invested in, including over 100 private market funds, and we specifically as well identify which of those cover ESG or impact, so that they can see what we're doing there as well. What we have to do is make sure that we achieve a minimum return set by our actuary, and that's why we involve our employers all the way, because if we make bad decisions, then it hits them the hardest. It's them that are going to have to pay. The members only pay a percentage of their pay into the pension fund. The employers pick up the majority of it. So we need to be engaged with the employers as well.
So let me ask you. So once, say we move the members through this, they become increasingly knowledgeable about the fact they have a pension and how it's invested, and they start to stare at the investments that the pension fund makes. What is their reaction to that? I mean, Emilie, what's your view on that? Once you see what the pension fund is invested in, what do they make of that? How do they interpret that? And are they going to say, stop doing this and do more of this? I mean, what do you think the reaction is going to be? So get to the stage where they actually comment, they can actually see the holdings. Now what?
So I think that adds another layer of complexity for members. I mean, even for me, like when I wanted to start investing more ethically and sustainably, it's not that easy. It can be quite confusing. I think the first thing is around the jargon. Many people would consider like ESG factors when they start investing, but what's the difference between ESG, SRI, impact investing? And the problem is there's no consistency across the board at the moment, so you don't know exactly where you're investing your money. I think that can be quite a steep learning curve to actually learn about the foundation of pension and investing, and now looking at the jargon around ethical investing. So how do you actually do it? I think it's important to understand the decision making behind pensions. So if you're in a default scheme or a DB scheme, this will be basically chosen for you by the pension scheme trustees. So again, that's really important to maybe offer more education around, how is the money invested, what's the strategy behind it, and explain, what type of funds is your money going to be in. But also, if you're in a DC scheme, then you may have a suite of funds to choose from, and you should be able to, make sustainable choices. But again, this can be quite complicated for someone who's never invested any money before, because I guess for most people, investing money ethically is just following one company and investing in this company and just buying shares in one company. But you have to follow the process of diversification, asset allocation, and it's really hard to ask people to do it for themselves.
Diandra, sorry, Emilie, I want to ask Diandra to come in here, because I think I remember seeing that Nest is doing a project with Tremelo to share the underlying holdings. Is that right? Can you elaborate on that?
Yeah, so we are looking at sort of third-party providers to help enhance our communications to members, really just to give them that insight and understanding into what it is that they're actually invested in. Because, again, this is about building up that foundational understanding. If members understand where their money's going, they're already, some way to understanding how a pension fund works. So it's really important just, to have that foundational knowledge. And, just back to your original question on what schemes should be doing is, when we are talking to members about their pension fund performance, and this is some of the work that we are doing with third-party providers like Tremelo, is how do we get that language right? How do we communicate with them in the right way that actually, incites a bit of interest, a bit of intrigue, and, simple, targeted, clear and short communications, nuggets of information is what's needed here. Because, we're all distracted with so many things in life, members, and we're guilty of this. We are not going to read, to the bottom of a very, very long email. People just aren't that way inclined. So it has to be short, it has to be snappy, and it has to be interesting. And, we don't think that a large proportion of our members want to really understand that level of detail. They don't want to understand that they are invested in thousands of companies around the world. They're not really that interested in having an asset allocation breakdown and things like that. We've got 99% of our members automatically enrolled into the default fund. So, whilst we are starting to build up that knowledge and understanding amongst the pension membership and start talking to them about ethical investments and what it is that their values are, we're giving them the channels of communication to tell us what their concerns are, what they find interesting. That doesn't necessarily translate into behavioural change. So whilst they may say they're interested in an issue or they're concerned about something, they're just saying it and they're not actually doing anything on the back of it. And that's why for us it's really pivotal that we get what we're doing in the default fund right, that we are managing the most financially material ESG issues across our investment approach in the long-term financial interests of members. And getting that communication to members is absolutely critical, but it has to be, clear and concise and relevant to them as well. I think people want to know about information that affects them in the right way, but we can come on to that later on.
And Debbie, you said you've been quite transparent in Clwyd. So when your pension members see that, say, the pension fund is invested in oil and gas or something else, do they express their view to you? Do they get back in touch with you and say, we want to invest in it, we should be divesting from something or doing more in some other area? I mean, what has been the reaction of members?
Yeah, what I would say here is we don't go to the level of detail of the underlying funds. We've always been in pooled investment, so we've always done it that way. But in total, I've had less than 5 emails from members in the last 12 months asking me about our exposure and what we're doing on climate risk, fossil fuels. We've also got AVC. We have to offer our members additional voluntary contribution scheme. They choose where to put that money, and less than 5% of the total value of that fund is invested in an ethical, now listed as a social fund, and that's where they get the decision themselves to make. So we try and do the best we can. We've moved away, we've gone to an ESG fund now, passive fund, that's got some exclusions in it. We talk that through with our committee As I say, the committees are public committees. All the papers are on the website. We publish all our committee reports, so they'll see what we're investing in, where we're moving from, if they want to.
Okay, so let me get a sense of some specific examples of impact investments that are made either in Clwyd or in Nest. Diandra, can you, when we talk about impact investments, rather than in the abstract, what are the types of investments that you would put in the impact or sustainability category?
Yeah, so we've started moving into private markets in the last couple of years or so. And we knew that this area is particularly ripe for impact. You know, this is an asset class that has a very long-term investment time horizon. And that really suited us really well as well. So, you know, what we're seeing in the private market space is opportunities around renewable energy. And this is something that is absolutely critical for us in terms of meeting our new climate change ambition that we set out earlier this year. We've committed to being net zero by 2050 with the intention of halving carbon emissions by 2030. And investment in private markets is going to be quite a fundamental way of achieving our climate aims. So we are seeing some really interesting opportunities around you know, solar, wind, hydro, but not just in the environmental space, you know, also with regards to social infrastructure. You know, we've made allocations to social housing and healthcare providers. And, you know, this isn't because we're nice people and we just want to support these assets, but these are actually very, you know, attractively priced and, you know, from a risk standpoint, very, very low risk when you think about public equities at the moment. And also, you know, these are opportunities that our fund managers are finding that really meet our risk return profile. So not only are they very interesting from an impact perspective, they also fit with our risk return objectives. Yeah. So that's, you know, so that's absolutely great. But it's not just within the private market space. You know, we're already tilting towards sort of companies that are well positioned from a climate transition perspective. Those companies that are involved in the manufacturing and production of renewable energy. So we're actually investing more in those companies in our public equity space as well. We think from a long-term perspective, these are the companies that are likely to be more resilient, more future-proof as the world transitions to a low carbon economy. But it's not just.
Let me get some let me get some ideas from Debbie as well.
Yeah.
In the same category. So I mean, it's fantastic, Diandra, to hear the specifics. So it's not about impact investing or sustainable investing. It's about specific investments in specific sectors. Debbie, what would you add?
But can I? Sorry.
Go ahead.
It is. Yeah. Go ahead. I was just going to add that we also are making a lot of positive impact from our stewardship activities. So getting companies to pay the living wage, for example, that we've been really active in, is also about, you know, making positive impacts, not just for workers in terms of their well-being, their morale, but also companies and wider society as well. So you can make impact through that way as opposed to investing in specific solutions.
Yeah, great. Debbie?
I think, as I mentioned in my intro, we've been investing in this area in a long time, but we didn't go into it because it ticked an impact box. Our initial duty is to returns, and in our private market space, we expect a lot of returns. It's actually our best performing asset class. And we've been investing in infrastructure since 2000. We went into renewables and clean technology in 2008. So we've been doing it for a long time. But we also found, when we looked under the hood, that a lot of our mainstream infrastructure managers are also investing in renewables. So we actually turned out to be quite overweight in renewables because we try and build a diversified portfolio within private markets as well. So we were actually overweight renewables. So we had to sort of scale it in a little bit. We've turned the other way now and we'll invest more in renewables. But again, we look at it from a social impact side. Governance is key to us. A very well-governed company, you're going to get the returns. So to me, it's just common sense. So, you know, if it seems like a good idea, it usually is.
So given what you've just said, Debbie, I want to bring in a question, which is from Charles Elson. It says, in your roles as capital allocators, a common concern raised by some, including pension funds, is a lack of suitable products, including those that get the right balance of risk and impact and return. Do you share this view? Let me ask you that. It doesn't sound like you do.
No, there's more. Do you know what? There's more than enough funds out there. The issue I've got is not having enough capital to deploy to them. So next year, within our impact portfolio, I can only allocate a certain amount in my forward cash flow. 4 of my existing managers are coming back to the market and I haven't got enough capital to give them all. So there's more, and that's without the new managers that are continually knocking on my door. There's so much out there for us to invest in. I just wish I could invest in them all.
And Diandra, what's your experience at Nest? I mean, you're a lot bigger, so you've got a lot more capital, or will have a lot more capital to deploy. So are you finding shortage of ideas?
I mean, no, not really. I mean, within the private market space, these types of assets are, a really sizable part of the investment opportunity set. So, I think the opportunities are plentiful and they'll keep coming. I think, obviously we do want to be diversified. So we don't just want to invest purely in renewables. We are investing in a specific renewables mandate, but in the other more broader, infrastructure equity mandates, that is already quite full of renewable energy. So in the renewable space, that is a really up and coming area. But we are actually saying to our fund managers, we want you to be as diversified as possible. But where there are other assets in the broader portfolio, we would expect them to be, as Debbie points out, very well managed, well governed. Obviously we don't want those assets to contradict what the renewable energy portfolio is trying to do as well. So everything has to be managed within, that sort of, climate context. And I think more and more the fund managers are seeing, projects and assets that are well disposed to that are transitioning, that are very mindful of future carbon risk. So I think the opportunity space is growing, and not just within private markets. I think you're seeing ESG and impact funds in the bonds, in fixed income, in property. But, for us, we try not to go down that space of just investing in an ESG or impact fund. We are encouraging our fund managers to kind of embed these things in broader portfolios so that all clients benefit.
Very interesting perspectives from 2 pension funds about the range of opportunities available. So let me go to another question, which is why doesn't Nest offer an impact option? So I guess a high impact option. And I want to bring in Emilie on this one, because one of the questions is, should this all be done in the default fund, or should there be additional options in a DC plan? And if there were additional options, would savers have the confidence to go ahead and make that investment? I'm going to start with Emilie on that and then come back to you, Diandra.
Yeah, so do you give choice or actually, try not to give too much choice to the individuals, because these are, quite difficult choices. Diandra, it was interesting to hear you speak about, people don't necessarily want to understand what investments, where is their money. I think we see actually a growing demand from individual investors, and they want to know like where is their money going, and I was seeing many like contradictions and misunderstanding between where you think your money is going versus where your money is invested. And maybe this is because of the jargon or the need of more transparency. But if you think your money is in ESG, maybe it's just in E or S or G. But I think people can get very confused, and that's where pension provider can also lose some trust around pension, and then dismiss pension completely because the money wasn't going into the right pocket maybe, or into the right investment. So I think we should definitely give people the choice of where they put their money, but maybe we should be even more clear about where is this money going and what's the strategy behind these different pots.
Okay. Diandra?
Yeah, I mean, absolutely. I mean, the point I was trying to make there was that not everybody wants to understand, at a granular level where their money is going, in terms of which asset classes, which geography, which types of companies. But I mean, from a from a top level, absolutely. But I think we've got 10 million members, and it's really, really difficult to kind of draw conclusions from such a diverse membership. But we know there are pockets within our membership who do want to know more, who want to be more active. And in terms of that impact investment option, you know, that is something that we are actually looking at. We do look at our fund choice regularly. We do want to ensure that it's adequately sized. You know, from our earlier research, you know, it told us that having too much of a fund choice is not going to be that effective. It could just confuse members, and you know, we think we've got quite an adequate fund choice at the moment, and 99% of our members are not making a choice. You know, they're being automatically enrolled, and you know, and as I pointed out earlier, whilst you know, from our research, it said that people want to understand how investing in certain assets are, you know, benefiting them or benefiting their communities and their personal circumstances. You may well tell them that, but that doesn't mean that they'll necessarily make a change to kind of coincide with that. So even if we would bring in an impact investing option, and we are sort of doing some research in that, around that, what proportion of members would actually, you know, opt into that? And remember, we are a fairly low cost scheme. We have to make this work from a cost perspective as well.
So I think, so this brings me to briefly another question that we've gotten here, which is between the fact that many of the assets are DB assets and most of the DC assets are default and not DIY choices. Fundamentally, the decision-making here comes down to the trustees themselves. And it's the trustees who have to get comfortable with the type of investment strategies that are being done. So the question I have here is, how can pension fund trustees come around to allocating towards fund managers managing for impact, both quoted markets and private? What have been the barriers among pension trustees to go down this route? Because fundamentally, the question fundamentally recognizes that it's really about the trustees and their view on investing in making investments that have societal and environmental impact. Debbie, what's your perspective? And maybe you've got a set of enlightened trustees, in which case tell us more. But
our committee members, to get us to where we are, we've had lots and lots of training on the areas. As I say, that it's not new to them. We've been doing it for years. They've met the impact managers along the way as well. So, for example, one of our low carbon workplace funds, we brought the manager into them to explain what they were doing. So they've been kept informed the whole way. We have annual employer meetings. All our committee come. We've had impact managers come and present at those annual meetings as well. So it's not really been an issue for us. They're quite open to it. I mean, if it feels good, then why not do it, as long as you are getting the returns as well. And we can have our cake and eat it, as far as I'm concerned.
Diandra, what's your experience been then with trustees?
I mean, I'll speak more generally, because I think, you know, our trustees are quite well engaged on the issue. But I think, you know, trustees have been put off because I think there's been some conflation and misunderstanding about, you know, the sacrifice of investment returns. I think they're worried about, well, we have to have intentionality. We have to think about a problem that we want to solve first and foremost. And that gives way to quite a narrow investment opportunity set. So I think they're quite worried about sacrificing investment returns. So I think there needs to be much more clarity around that, you know, trustees can actually make a positive impact on a range of matters, but also meet their risk return objectives. And I think as time goes on, we'll definitely see many more opportunities come to light and come into the opportunity set. I think there's still been a focus on research and data. I think trustees want a lot more research around impact, you know, investments, and, you know, if they do invest in impact investments, you know, where's the data and the measures and the metrics to help them understand what impacts those investments are making. And at the moment, you know, there's no sort of consistent reporting standard on impact, you know, and reporting those impacts that some investments may give way to. So I think there's still a lack of research and data on that. And, I think trustees are asking for that. And I think, there needs to be that intentionality. And I think trustees think, well, at the moment, we've just got so many other things on our plate. We're grappling now with ESG regulation that's, put on our plate. We need to start understanding how we can identify financially material ESG risks, but not quite drawing out the link with impact. So I think it will come. I just think there needs to be that education, that type of trustee training. And, our trustees have expressed an interest on where it is we sit on the spectrum of impact. So we'll be doing some more work in perhaps developing some impact objectives and how they sit next to our ESG objectives.
So a version of the points that Emilie and you were making earlier about the need for communication, step-by-step communication, appropriate communication applies not just to the member, but also applies to the committee members or trustees who are themselves, in many cases, not investment professionals, but they have other functions. And so that whole theme that we've been striking about the need to get the communication right and to bring people along step by step, I think also seems to apply to pension trustees and committee members in the case of an LGPS.
Can I just make one comment?
Yes,
Sorry.
please. Go ahead.
I just wanted to say I'm actually a member of my pension funds as well. So, I'm investing in products that I believe in as well.
Yeah.
So I don't know whether that comes across to anybody else, but I am actually investing in my own pension fund, and I'm doing that on behalf of other members. I wouldn't gamble with my own money, and I wouldn't gamble with anybody else's money either.
That's a very important point, Debbie. Now, we have unfortunately and unbelievably run out of time on this amazingly interesting conversation. So we have to stop here. But, my hope is, I would just hope it stimulates further discussions. And I mean, obviously, there's much more to discuss, but if this conversation can stimulate some further discussions, I think it will be well served and will have done a useful service. Before we close, I'd like to ask our panelists if they have a final short observation to make as a takeaway for this audience. Emilie?
Yeah, I think we shouldn't take for granted that people actually understand pension. And I think we need a much bigger engagement around pension. Maybe, when you have your first job, work with your employer should educate their employees. So really build a better relationship with pensions, because that's must be your biggest part of money. So that's really important to start with the right path. Yeah.
Thank you, Emilie. Debbie?
I just make a comment to those that are not yet investing in the impact space, that don't be scared of impact. Look under the bonnet of your existing portfolio. We did it, and we were pleasantly surprised that managers in some cases are already doing this. They just don't label it impact. It's just a small part of their portfolio.
Great, thank you. And Diandra?
Yeah, I would just urge all pension schemes to think about, where on the impact spectrum they sit, think about how they define impact, what it means for them, and to frame some, objectives around it, and just be clear. I think that will really help trustees, grapple with this issue of impact and where it fits within their investment approach. So I would think, have that conversation.
Well, we're going to try to help them with that conversation, Diandra, because the Impact Investing Institute has just published 4 principles of impact investing, which are available on our website. They've just come out. We've gotten a tremendous response to them. So I think for pension trustees and committee members at LGPS, it's worth a look, because I think what it does is it fleshes out some of the issues and considerations that we've just spoken about. So I think it's a really, really useful guide. Thank you, all 3 of you, very much for taking part today. I want to thank the audience as well. Some good questions and challenges, and we didn't come remotely close to answering them all. But it's been a great session. I'm just very appreciative to you. We will shortly move on now to our fireside chat with Elizabeth Corley, Chair of the Impact Investing Institute, and Anne Richards, CEO of Fidelity International. But before we do that, we'd like to show you a few more of the amazing organizations that are delivering positive impact on the ground. Thank you.